If you could hit that, okay, perfect. Look at that. We're already in sync for the new year. So first, let me take a moment and welcome you all to our first of 2022 of our Homebuyer webinar series for this year. We felt we had a really successful year last year on the mortgage team in providing a variety of information to our members about really all aspects of home ownership. So we are really excited to kick off this year and have had a great response with this topic. So we are excited to talk about your credit and getting your credit in shape today. So again, my name is Dan Sugg and I am the Chief Mortgage Lending Officer here at Michigan First. And we are a division of Michigan First Credit Union. And my office is right here at our Evergreen headquarters. And my job today is to really facilitate a conversation around your credit. And we're going to go through the agenda, which will include introductions, getting your credit in shape. And that is the bulk of our conversation today once we get past introductions. And we are excited to answer everyone's questions. So if you have questions for us, please make sure to put them in the chat box. We will try to get to them as we're going along. And rest assured, if we don't get to them today, we will make sure to follow up after the call. Without further ado, let's jump into our introductions. We're glad to welcome back a two-time participant of the Homebuyer webinar series, Grant Spencer. Grant is one of our branch managers in our Rochester Hills office, and he has years of experience helping people obtain mortgages, both as an originator and as a person that manages salespeople. So Grant, tell us a little bit about yourself and your office and what you bring to the team.
Well, thanks, Dan. Yeah, you've pretty much summed it up. I've been doing this. It's the only thing I've ever done with my adult life for here the last 2 decades. And I really do love being able to help people. What I do in my position, I think, is one of the best in the world, to be able to help facilitate people to get into home ownership and be able to provide for their families. On the side, beyond the stuff that you're seeing on the screen, I also teach classes in how to rebuild credit and how to manipulate credit, as well as taking care of people who are going through divorces as well. I also teach a divorce care class on the side for people who are going through that troubled parts in their lives. But of course, as we go through this, I welcome any and all questions that you might have in regards to how you can help yourself out and your family members with regards to your credit.
Great. Thanks, Grant. We appreciate you joining today and taking the time. And also, Bill Folks is back from GreenPath. Bill is also I believe, a two-time alumni of the webinar, and we are excited to have him back. GreenPath is a partnership with Michigan First, and I'd love to hear more about what we do, Bill. So tell me a little bit about you and GreenPath.
Thank you for having me, Dan. Once again, my name is Bill Folks. I'm a partner experience manager at GreenPath, and really what that means is I work directly with our credit union partners, making sure that they have what they need to get the information their members need to lead financially healthier lives. Before that, I was a financial counselor with GreenPath. I did that for about 6 years, joined GreenPath in November 2008. And for those of you who aren't familiar with GreenPath, we are a nonprofit credit counseling agency. Our headquarters is in Farmington Hills, but we counsel nationwide in all 50 states over the phone and face-to-face in something like 50 locations across 20 different states. But Michigan is our home, and we are always happy to help out here at home.
Hey, Bill, just take a quick moment. I'm going to throw a curveball here, and something you mentioned just now triggered a question. You said you're face-to-face. Are you guys face-to-face during these unprecedented times, or how do you handle those now?
Actually, during COVID, we have not been doing face-to-face. So those face-to-face counselors who normally would be speaking with people in person, they are actually working in a call center environment, working from their homes like everyone else. I'm working from home right now. But once everything is back to normal, if we ever get back to normal, once we're able to go face-to-face, those counselors will be doing face-to-face counseling again. Right now, we're looking at a date of mid-June before we're going to be back in the office again.
Okay, that's good to hear. Awesome. And I know it didn't stop you from helping folks and helping our members, but certainly understanding that if they have maybe some hesitation about coming face-to-face, there is an option for them too. So, all right, let's jump into our conversation. Zareen is with us too on the team. Don't let me forget to introduce Zareen. Zareen there is to manage the chat box and most of the technology today. So thanks, Zareen, for helping out. All right, I'm going to shoot this first credit question to Grant. Grant, from a mortgage perspective, why is credit important to you?
Well, again, good question. In regards to a mortgage, credit is incredibly important for qualification to be able to buy a home. Your credit is a reflection of your payment history and overall general responsibility in regards to the loans and requirements that you have to be able to pay back to creditors. So when we talk about getting you approved for a home loan, we oftentimes are utilizing some of the major government sponsored entities in the world, such as Fannie Mae or Freddie Mac, and they have minimum credit score requirements in order to be able to be approved for a loan. Traditionally, those go about 620 and above. So what credit score is important to someone in order to be able to purchase a home, in the sense that you'll need to have adequate credit in order to be approved to be able to buy that home going forward.
Yeah, so credit, certainly, the old adage is right, the past can be really a predictor of the future. That doesn't mean it has to be that way always, and there are many tools which we're going to hear from Bill today that help improve that, and tricks and tips that you can do to move along that path. So Bill, I'll go to you. You heard Grant talk about, from a mortgage perspective, why credit's important. So help us understand why that is ultimately important from your perspective, and then maybe what makes up the credit score? Like, what affects it for us today?
So the reason why credit is important, in addition to a mortgage situation, is really anytime you are looking to borrow money, one thing they're going to look at is your credit report and score. Also, your credit report and score can impact things that has nothing to do with your lending. For a lot of jobs these days, if you're applying for a position like here at Green Path, they looked at my credit report and score before I came to work here. If you're applying for certain government jobs, if you have, if it's something that requires, say, a security clearance, they're going to want to see your credit report, because if you have too much debt, they might be leery of giving you the job because they're afraid you might be a target for bribes and whatnot. So, anytime you're looking to borrow money, I could not have bought my car, bought my house, gone to college without borrowing money. And, my credit report and score was very important for those things. To answer the second part of your question, the things that really make up your credit score, the biggest part of your credit score is your payment history. And it accounts for 35% of your credit score. And most people aren't surprised to hear that you have to pay your bills on time in order to have a good credit score. But a lot of times people are surprised to hear that it takes up that much. So paying your bills on time is about 35% of your credit score. After that, it's the amount of credit that you owe. And that's really talking about unsecured debt, but really you don't want to use much more than about 30% of your available credit. So if you have $10,000 in available credit, you don't want to be using much more than about $3,000 of that, because once you do, your credit score starts going down. After that, length of credit is about 15% of your credit score. Mix of credit, which means the types of credit you have, and new credit. Whether or not you open a new credit, that also impacts your credit score.
Yeah, and I know one thing I learned when I got into this industry was the credit utilization number, that 30% you're talking about. You could pay all your bills on time, everything is agreed, but if you have one credit card with a $9,000 balance, it's gonna hurt your credit score.
Yeah.
It's gonna tell to the creditors that, hey, this person is always at their max, and is at risk if something was to happen. So something to keep in mind as you're looking through your credit, which is pretty interesting. You also talked about mix of credit, Bill, and maybe you could just go into that and tell me what are the different types of reportable credit items that you can use to help build your credit score?
Well, traditionally, those things were things like unsecured debt, any secured items. So, like, if a lot of times people who are just starting out looking to establish credit, they don't have a lot of mix. They don't have a good mix of credit. But what they're looking to see is that you've been responsible with several different types of credit. Are you paying your credit cards on time? Have you paid your car payments on time? So before they go speak with Grant wants to see, are you paying your car? Have you paid your car bill? Are you paying your credit card? Are you paying your student loans? Recently, over the last couple of years, they started looking at things like, are you paying your utilities on time? And are you paying your rent on time? That's relatively new. And not everybody looks at that, but some creditors are looking at those things. What they're looking to see is, are you responsible with the debt that you have before Grant decides whether or not he's going to give you more debt.
Yeah, Grant. So I just heard Bill say we can add our utilities to my credit report. How does that help us? And what scenario do you see that happen today?
So there are a couple of credit bureaus right now that will go ahead and, with your permission, reach out and add certain elements to your credit report to help build credit history, such as cell phone bills, other types of bills that you might have for your utilities, rent, etc. And what those are going to end up doing is creating greater credit history, as Bill talked about, and also a greater credit mix. Now, going above and beyond that, when we start talking about mortgage, it's actually more of a benefit for a borrower as well, because in regards to those debts, such as utility bills and those kind of things, we don't have to count those against a borrower from Fannie Mae and Freddie Mac's guidelines. So someone might want to go ahead and optionally have the credit bureaus report that information to their TRW, so that it does show up, getting them greater credit history and hence a higher credit score for qualification. But when they do come to me, I don't end up having to go ahead and count that in their total, what we call debt to income ratio, which is a ratio of how much money you make versus how much debt you ultimately have in the end.
Yeah. And I think you're alluding to, so the three major bureaus are TransUnion, Equifax, and Experian, correct? That's who the three recorded. Yeah, so one of them I know for sure, without advertising them here, has a boost program that you can do. And is that what that means? Is that they'll help you boost your score by adding some of that stuff?
Potentially. Yes, that is what Boost is. How it works is that a consumer would go on to their website and elect to have Boost report those additional utilities, such as credit card utilities and cell phone bills, to their credit report to help build that history. It is optional. So you have to go on to the website and have them elect to go ahead and add that to your credit report.
Yeah, maybe we should go back a little bit. We're talking a lot about credit report, and I know in today's age with technology, we get a lot of different tools, including all the credit cards you get now, or Mint, or all the different softwares that you can use. They offer a credit scoring model. So what's the difference between like a Credit Karma, or what my credit card's telling me is my credit score, and I'll point this one at Bill, and what we might be using in our industry, in the mortgage industry? How does that differ a little bit?
The difference is that, companies like Credit Karma, they use the Vantage score, whereas most creditors, like First, and just about anyone else.
Bill, I don't mean to stop you. We're having a little hard time hearing you. I don't know if you've got right on your mic there, but so if you could just lean in just a little bit. So
how about this? Is that better?
A little better, yep.
Okay, so the difference between, say, Credit Karma and others is that Credit Karma might use something like called the Vantage score, and the Vantage score was something that the credit bureaus came up with to compete against FICO. It didn't really take off. Creditors use FICO. I think just about every creditor uses the FICO score. So if you're looking to see what your creditors are going to use, you want to get the FICO score. The Vantage is good for giving you an idea of what your credit is, and so it's not going to be wildly different from the FICO. But if you have a Vantage score of 800, it doesn't necessarily mean that your FICO is going to be 800 as well. It might be different because it's calculated using different criteria.
Yeah, and I'm going to ask Grant his side of that too. But from that perspective, a credit report is a snapshot in time, where Advantage really is real time. So whatever gets reported in that day. So if we pull credit on a Tuesday, the first of the month, your credit score completely different on the second through the Advantage score too. So Grant, what is your thought on kind of the Credit Karma, Mint versus, you deal with this, I'm sure, all the time when members come in?
Absolutely. And we're going to do a bit of a deep dive here in just a couple of seconds and be able to give some information to everybody that'll help them overall. So as Bill was saying, Vantage was designed by TransUnion and the credit bureaus in order to be able to create a different model for scoring. We as lenders since the early 90s have been using FICO and likely continue to do so. The differences between the two systems is the algorithms. Each has an algorithm that balances and weights different items in your credit report at different proportions. You will always have a higher credit score on a Vantage system than you will on the FICO system. And the reason why is FICO is rated is rated that way to be more conservative for lenders overall. So to give everybody an idea, because we all look through the Credit Karma, the Credit Wise apps of the world, which use Vantage, but we all want to know, what is our real true FICO score for lending? As a general rule of thumb, if you take your Vantage score and subtract from it 30 to 40 points, you will likely be in the ballpark of where your FICO score is. And folks are going to say, well, I want to know what my FICO score is at that point. I always go ahead and guide people to a website called myfico.com. That's myfico.com, where they can pull their tri-merge credit report. That means all three agencies, and you can see everything that you have in front of you. MyFICO is also an amazing resource for how to be able to change your credit score, manipulate it, and gives you all the tips and tricks on how to be able to manage your credit history better.
Grant, you just covered like 6 of our topics all at once. Good job. All right, so let's back up a little bit and unwind that. So courtesy of regulation, we are able to get one free tri-merge credit report a year. It's annual free credit report. So Bill, tell us a little bit about, expand on that a little bit, and how our members can go get that.
Yep, so you are, as you said, Dan, you're entitled to one copy of credit report each year from each of the 3 credit bureaus. And you can get that at annualcreditreport.com. And you can actually split those up and get them throughout the year. So for instance, my birthday is in January. It's actually just the other day. I normally pull my credit report around my birthday. And then I'll pull another one, say in April, and another one maybe in late summer. And so with the law that was passed about, I guess, 10 years ago, you're entitled to one copy of your credit report each year. But one thing that actually annual credit report has done since the pandemic started, so going on 2 years now, is that they're actually entitled, they're letting you get a free copy each week from each of the 3 credit bureaus. And wow. That's indefinitely. And originally they had an end date of that. It was going to end like in April 2021. But they extended it. Now it's indefinite. So you want to go to annualcreditreport.com. I always say don't go to free credit report. That was the one with where they used to have the guys singing in the commercials. You don't see the commercials anymore, but they're still around. And they're not free. So go to annualcreditreport.com to get your free credit report.
Yeah. And Bill, run that through me again. I hadn't heard that. So you can pull it once a week. How does that work?
If you go to annualcreditreport.com, there's one of the first things you see is a banner where it's in the middle of the page where it, or at least the last time I was on there a few months ago, there was a banner that explained that during the pandemic, they are extending and allowing you to get one free copy each week from each of the credit bureaus. So just go back to that page and you can pull it.
Wow. Very cool. I love the concept. And if you think about reviewing your credit on a regular basis, weekly can be daunting. Certainly that's cool because you'll see some stuff that is happening you're maybe not aware of, and there's certainly many tools you can do that with. But let's say I find something on my credit that's a mistake. And I know Grant said there's a bunch of tools at that website, but what can I do? What's my recourse if I see a mistake on my credit? How does that work, Bill?
Well, for most of us, it's not a matter of if, and eventually all of us are going to get some kind of mistake on our credit. And in most cases, it's an honest mistake. It's where somebody genuinely confused you with someone who had a similar name or social security number. I'm named after my dad, so until the day my dad died, I thought of his stuff on my credit report. And I had to learn how to fix those things really early. And thankfully now it's a lot easier. If you pull your credit report, next to each item, there's a drop-down menu where you can select and perform actions on that item. And one of those actions is to dispute something on the credit report. Probably one of the last things I had to dispute was actually while my dad was still alive, and it was a collections bill for DirecTV. Neither of us had ever had DirecTV, so I knew they weren't confusing me with him. They were confusing both of them with someone else. And so next to that DirecTV thing, I selected dispute, and I explained, this is not my bill. I've never had DirecTV. I've never lived at this address that you have here. And they corrected it and took it off. When you dispute something like that, the credit bureau has 30 days to investigate it and take it off of your credit report. And if they don't respond within 30 days, it falls off automatically.
Yeah, and that is, again, an advancement in those credit those consumer protection laws around dispute. It becomes the placer of that, the burden of proof. Like, it's just not as easy to get it on there. It's so much easier these days to at least dispute those. So, all right, let's switch back to Grant for a second. Grant, let's say I pull my credit, and you know what? It's not so hot. I've had some bangs in the past, and I really need to get it improved. What are some of the things that I can do to increase my own score? Well, I mean, what would you say?
There's one trick I like to teach to people that is really not widely known at all. And it's something people can do to help themselves out. We talk about credit capacity and credit usage when it comes to somebody's credit score. I like to use the example of credit cards, as it's the most simplest to understand. Let's for a moment say that someone had $1,000 credit limit on a credit card. When somebody uses a credit card, their amount of credit usage goes up. And you'll see this on your credit card reports when it talks about the amount of credit that you've used on that credit card that Bill alluded to earlier, about keeping that at 30% or below. When you utilize your credit, for every 1 point of credit usage, your score goes down 1 point. This is a general rule of thumb, of course. So let's say, for example, we talked about someone having $1,000 credit line on a credit card. If that person charged up $950 on that credit card, they're still underneath the limit, but they've used 95% of the available credit on that credit card. So that means that potentially their score is 95 points less than what it could be. So when we have a situation where somebody has smaller lines of credit on their credit cards and utilizes a lot of that credit on an ongoing basis, one of the simplest things they can do is reach out to their lending institution like Michigan First and ask for an installment loan so they can consolidate that credit card debt off of that credit card and put it into an installment phase. Now, in our example here, where somebody had $950 charged, if they went and they got an installment loan and moved it over to that, the next month when their credit card reported to the credit agencies at a zero balance at that point, potentially their score could go up 95 points in 1 month simply because we opened up all of that credit capacity on that credit card. So that's one trick that I like to teach people that can have an instant effect on their credit card to put them into a better situation for success long term.
Yeah, there's a bunch of stuff you can do to focus on it. First and foremost, from my opinion, making your payment on time is number one. What do you agree? Number two is watching the credit card balances, making sure to keep them low when possible, and certainly below that 30% utilization. Something else to consider too, is there a way to make sure that you're not getting too many inquiries? Let's say you're looking for a car. Bill, what can inquiries, see we have a question in the box there, what can inquiries to your credit do to your credit score if they're excessive?
If you have a lot of inquiries for your credit score, that really brings your credit score down, because a lot of times the lenders will look at let me back up a bit. Every time there's an inquiry, a hard inquiry on your credit report, it brings your score down. There's two types of inquiries. There's a soft inquiry and a hard inquiry. A soft inquiry is, say, if you decide to pull your own credit report, or you call GreenPath. We are a credit counseling agency. We're pulling it for educational purposes. That's a soft pull. We're not trying to say anything. That's a soft pull. A hard pull is whenever someone pulls your credit report because they're reviewing you for credit. Hard pulls affect your credit score. And the logic behind that, which I'm not sure if I quite agree with, but the logic behind that is, if you have a lot of credit pulls on your credit report, then it looks like you're desperate and you're looking for credit. I don't really understand or agree with that. But the way to avoid that with many types of loans, I know this is with mortgages, but I believe it's also with car loans as well. If you know you're going to be looking for a loan, so say if you know you're in the market for a car or a mortgage, have a game plan. Know how many creditors you want to speak with. Know who you want to shop with, and have all those done I believe within a 14-day period. And it counts as one pull, as opposed to pulling it today and then pull another one 3 weeks from now and another one a week after that. That's going to be multiple pulls.
Yeah, and we do see that sometimes when people are shopping for cars or shopping for homes. So make sure when you're doing that, you're not giving authorization to pull credit without really any thought to it. Make sure that when you're ready and you've made your buying decision, that's when you should really start the credit inquiry. So we are getting close to the time. Maybe one more question, and I'll pose it to, let's go with Bill. Is it ever in my advantage to close an open credit card? Like, what do you think about that?
Sometimes it is a good idea to close an open credit card. I've done it. I had a credit card many years ago that I wasn't using. I kept it for emergency reasons, and in case something happened. And the creditor came to me and said, "Well, we're going to start charging you an annual fee for that." I said, "No, you're not. I closed it." So the thing you need to keep in mind is when you close a credit card, it is affecting your credit history. We mentioned that 30% of your credit score is that history, and you're losing that history when you do that. But I always say if you're not planning on like buying a house within the next 6 months or buying a car or making a major purchase where you're going to need to take out a loan, if you need to close a credit card, go ahead and close it. I would suggest that you not do that if you're going to be using credit anytime soon. But sometimes it's a good idea to close a credit card if the interest rate is going up or just being ridiculous with fees. And sometimes some creditors will do that. It might be a good idea to just say, you know what, I'm done with this. I'm going to close it instead of paying these fees.
Yeah, and be cognizant. I think you hit on it there about the age of that credit too. So if you've had a credit card since, let's say, college, and you're in your working life now, and you're deciding which one to close, the new one or the old one, certainly consider all the terms, but that age matters too, because they look at the age of all the accounts and the average age of all your accounts. So we are at that time. So I would love to open it up to Grant and Bill both, and tell me if there's 3 things I should take away from today's seminar. Please let me know. I would notice. Grant, what would you tell our members?
There were 3 things I would tell you about credit in the long run. It's simple, right? It's the simple things that can have the most amount of impact in your life, such as Bill talked about payment history. It's one of the, if not the most important things on your credit. So if it comes down to it, I know this is but if it comes down to going ahead and having a steak dinner versus doing mac and cheese one night versus you making a payment to a credit card or not, make the credit card payment. Even just paying the minimum, make sure that creditor realizes that you are receiving that money on an ongoing basis, and it shows responsibility, which ultimately in the outcome will help increase your scores in the long run. The second thing is, when it comes down to having an appropriate credit mix, a lot of folks might have just credit cards, maybe just a auto loan. What's not known a lot of times is that if you don't have an ongoing credit history within 6 months, like for example, some folks
you all right?
History
on a Zoom call.
They might get in trouble. And
just wanted to speak to you.
Where they
I don't want to be rude. And just,
not able
come
to
on.
go ahead and
See you guys.
Zarain, can you please move them?
Okay. Thanks for appreciate that. So if somebody gets in trouble and then they go ahead and they say, okay, I'm swearing off credit cards. I'm not going to go ahead and use credit anymore. And they just do everything in cash. Realize that not doing anything in the credit world is just as bad as having bad credit. So for example, if somebody went ahead and didn't utilize credit cards on an ongoing basis, didn't have any installment loans or anything that was reporting their credit bureau, and that went over 6 months, their credit score actually goes down or disappears completely. And so we've seen people that have gone to a full cash situation on their daily lives and have their credits really disappear. So, the other part is managing your credit and continuing to use your credit, even if it's just having a credit card and buying a tank of gas every month and then going and paying off that credit card just with that one tank of gas. That shows on-time payment history. It shows that the date of last activity is current, and it puts them in a situation for success. And the other part is as well, when we talk about, and Bill talked about this too, like creditors, when they pull your credit report, there is a time window for 2 types of creditors out there where if you have your credit pulled by them, it counts as one inquiry. Those 2 types are auto lenders and mortgage companies. And you have 2 weeks from the time of the first pull to have as many people that identify themselves as that type of creditor pull your credit in that window, and it only counts as one hard credit pull. So those would be the 3 things for takeaways I would give our members today.
Thanks, Grant. And Bill, how about from your perspective?
So 3 takeaways I'll have. Number 1 is make sure that you're reviewing your credit report regularly. Kind of like you suggested, Dan, right now you can pull it every week within your credit report. I don't know if I pull it every week because that would be a little overwhelming, but if you want to, since you don't have to do that once a year, I would say every couple of months for the credit report. When you pull it, make sure that you're reviewing it for accuracy. Make sure everything on there is correct. Like I said earlier, I don't think there's anybody who has a credit report that's never had a mistake on their credit report. And in most cases, it's not identity theft. Most cases, it's just an honest mistake where some human has made a mistake and put something in your report that doesn't belong there. So review your credit reports for accuracy. The second thing I would say is to make sure that you are being careful who you're taking advice from as far as your credit report and credit score. If you have questions, your folks at Michigan First are a good resource. If you're on this call, you are a Michigan First member, you can reach out to Green Path and we can help you out. The number is 877-333-3399, or lots of other sources, but just be sure that you are getting information about credit from people who actually know what they're talking about. And the final thing is, there are a lot of myths about credit report and scores. And one of the biggest myths that I like to talk about whenever I can is, you don't have to keep a balance on your credit cards to improve your credit score. A lot of times people, that's one I've heard all my life. You have to have a balance. You don't have to have a balance. If you can, pay it off every month if you can. That repayment history is the biggest part of your credit score. So how are you paying your credit is the biggest part of your credit score. You don't have to have a balance.
Yeah, I can't agree with that more, especially when you're young and just starting out. A credit card can crush your ability to really prosper when you have a large balance. So the most you can, start. Credit is expensive, no matter how you do it. It costs money, so make sure you use it wisely. So first of all, thanks both of you for attending today. Grant and Bill, wonderful job. We really appreciate all of you sharing with us. And for you Michigan First members, remember, we do have in-person credit seminars here that's put on by Mr. Polis and the lending team. Those are going to start back up here soon. We expect to have one in the mid-year timeframe. So look for those here at the Mint at Michigan First. And for general information around this mortgage seminar today, you'll just email us at that email address, mortgageseminars@michiganfirst.com. To reach out to any of our loan officers, including Grant, their confidential information is there. You can call the call center here at 365 Live to reach out to one of them 24 hours a day, and somebody will get back to you, and Grant's information is there. And GreenPath, I can't tell you the great work they do with our membership, and it's not just for bad credit, it's for people that need more information on how to utilize and financial information, and as Bill said, most of their services are free to our members. So please reach out either directly via email to Bill or call that 877-337-3399 number. And to our membership, thank you so much for taking the time today. We went a couple minutes long, but I think worth it. And if you ask a question in the chat box, I promise you it will get answered today or first thing in the morning. So thank you so much. Have a great day and off with the rest of our day. Thank you.